The Nasdaq was shut down for over 3 hours on Thursday. Here to talk about what that means for the company's stock is Morningstar analyst Gaston Ceron. Welcome, Gaston. And tell me, Nasdaq shares were up over 28% year to date before the outage on Thursday. What will this mean to the company's stock going forward?
I think it's a little bit unclear at this point. Hate to disappoint, but I haven't seen where I haven't seen exactly where the stock is if they've resumed trading, because I was getting prepared for this interview. It wouldn't be surprising to see some investor disappointment right away. Perhaps it's always kind of tough to predict exactly how the market will react sort of right away to an event like this. I think the event was certainly negative, and it wouldn't be shocking to see some investor disappointment at the beginning. I think over the longer term, I think what we care more about here at Morningstar, which is the stocks for performance for the longer term, I think that depends a lot more on how deep the problems run, what kind of response we see from management, that sort of thing.
Well, speaking of management, clearly Bob Greifeld had problems with the Facebook IPO. What will this mean for Bob Greifeld? Is he in trouble?
I think I wouldn't say quite yet, not at this point. I mean, I think that Greifeld has run that company for many years. I think that he certainly has a finger on the pulse of the U.S. of the world equity, of the world capital markets, and he's a very seasoned exchange operator. There's no doubt that the Facebook IPO issue last year was a problem for him and for Nasdaq, and I think that that's something that they're taking seriously. As far as how much additional damage will this incident inflict, I think it's a little too early to say, but I'm sure it's not something that they're happy about over there at Nasdaq. I think people will be watching very carefully to see what kind of response we get from management, from Mr. Greifeld and his lieutenants, and based on that, I think is how the market will assess exactly how deep the problems run. My suspicion at this point is that if they recover fine and if they give reasonable explanations for what happened, and more important, what they're going to be doing to make sure it doesn't happen again, then probably more likely than not that he'll be all right. But people will be watching his response carefully.
And what about the response from Nasdaq's competitors? Do you think that the New York Stock Exchange is going to pounce on this and steal some listings? How much will this hurt Nasdaq's market share?
Again, I think too early to say. But one thing to keep in mind for context is that we've had trading problems or technology problems, systems problems, whatever term you want to use, at other markets too. So it's not. While the reason behind today's problem still remains to be fully seen, it's not like we haven't had problems at other markets. So it's not as isolated a Nasdaq issue as I think it might appear. I mean, remember last year we had a problem with BATS, a big Nasdaq competitor that was trying to handle its own IPO, and that was a problem. We had a problem earlier this year here in Chicago at the CBOE in the big options exchange over here. So it's not a totally isolated issue for Nasdaq. At the same time, to your point, this does follow another very highly visible stumble that Nasdaq had last year with the Facebook IPO. So this is yet another problem that they've had, probably not quite as high profile as last year's, because Facebook was a very visible event. But at the same time, it's not good news. I think when markets compete, they'll use anything they can to get an edge on each other. But I doubt that in public you'll hear very much about this. I mean, I think that's the kind of thing that that you might hear behind closed doors as the market delivers kind of its sales pitch. But at the end of the day, when markets have a problem like this, it's actually not good for any market, because this sort of thing, if it goes unchecked, can erode confidence in the capital markets as a whole, and that's not a positive for any exchange. So keep that in mind.
All right, thanks a lot, Gaston.
No problem.